Okay, we're just going to give it a moment here as people are joining in.
I see the big red recording button. Whoa.
Does that make you anxious?
Not really, not at all. It's just,
Good.
when I do this, I can't see that it's recording. It's in the background. So
I understand. Okay. All right. Well, we'll let people continue to join in and hi. Thanks for coming in.
Very nice.
All right. Do you want to get started, Melissa? Should we?
Hi. So this is Janice, and this is recording. And for those of you who can't make it, I appreciate you sending me your questions. And so I've got a bunch. So if you're here, you can ask Janice yourself, and I'll introduce her. She is a CFA, a financial analyst, a financial planner. I'm going to make sure I'm saying it right.
Certified financial planner.
Certified financial planner. She'll make sure you know what that is. Because even people like me, I get it wrong. And she's been doing this for I think 20 years, right? Like all kinds of she'll correct me. She'll make it all right. She owns Century Financial Advisors. And you can go to centuryfinancials.com, CENTRY financial.com. I left the link up where you can go check her out if you haven't already and make an appointment with her if you would like. So that's a little about her. She works with women all over the country, I believe, but she's based in Cleveland, but she can do this. So she can even talk to us here in Columbus. All right.
Yes, I can. Yes, I can. So thank you. Thanks for joining today, Melissa. Thank you for inviting me. This is exciting. I'm always happy to talk to women about finances. As we all very well know, we've
I didn't realize this is my favorite large coffee mug, but now I realize that I don't look like don't look at it.
No, you're good. You're good. You're a patriot. Right. So anyway, I am Janice Kakowski. Thanks for joining me. I'm, as Melissa said, I'm a certified financial planner, and I teach all different things regarding finance, and love to be able to jump on calls where people can ask questions and just be a resource. So as I started to say, as women, we have maybe through our lifetimes been told verbally, or maybe just the way we've been treated, that we're bad with money, that we're frivolous spenders, that we're not smart enough to understand investing, that we don't save enough, and we just don't get it like men do, right? Which drives me insane. And I'm sure all the rest of you, which is why you're here. Is it possible that some of us are behind our male counterparts financially? Absolutely, because we don't earn as much as they do. If you're Asian or Black or Hispanic or Native American, you're even further behind in the earnings than Melissa or I with our privileged white skin, right? If we have a bachelor degree or beyond, that gap gets even farther. So yeah, there's absolutely a reason that we could be behind financially than our male counterparts. So we tend to be also the ones who take time off to raise children, to take time off to care for family members, right, Melissa, to have to take some time away from the workforce on occasion. So again, we have some things that work against us, but the things that work for us is we figure things out. We figure out how to get by. We figure out when things are rough, how to overcome and how to move on. Women are very resourceful. So as I know you all are, because you're here and you want to learn and listen. So we're going to talk today just real high level about financial planning and what does that mean, and kind of the breakdown of that. And I know Melissa has questions, and then we'll just kind of go into some conversation. And those of you that are on the call, I have a Q&A box open on the screen next to me. So there is a Q&A or a chat box. Both of them are open. So feel free to throw in your questions and we will do our best to answer along the way. Okay. I'm making sure my box opens on that screen. So any thoughts or anything else, Melissa, before I kind of jump in a little financial planning talk?
You're doing great. I'm making you look so good. So I can keep talking because you're just gonna keep looking so good at this.
Thanks. All right. So financial planning, and I know that the term is still new. It really is a very new concept. When somebody talks about tax or mentions the term CPA, most everybody knows that a CPA is somebody who is certified and has the credentials to prepare tax returns and to represent somebody in front of the tax council if need be, or the IRS. People get that. But when anybody can call themselves a financial planner, and that's where things get a little rocky. Pardon me. There is no regulation on who can call themselves a financial planner. So there are credentials out there. I have a credential called the Certified Financial Planner, where I went through 2 years of classes and took a comprehensive exam to kind of get myself ready to be able to give people good advice. But there are a whole lot of other letters that can be after people's last names. And I think you just want to be really conscious of that. If you are reaching out to somebody, understand what their background is, understand what those letters behind their names mean, and is that the right person for you to work with? So just be cognizant of that. So everybody can benefit from financial planning one way or another. Does that mean that everybody needs to work with a financial planner? Not necessarily. People can do their own depending on where they're at. Financial planning can be a really big concept, and it doesn't mean you have to have a professional working with you to help you through that. You don't need to be a financial expert to grasp some of the terminology and grasp some of the concepts to make your life a little bit better financially. So financial planning is that big concept, and what it includes are things like budgeting, being able to make sure that you are earning and not spending as much as you earn, savings goals, make sure that you're saving for the things that you need or you want in the future, whatever that may be for you, because it's different for everybody. Financial planning also can include getting out of debt. If you have debt, or controlling that debt, controlling credit, using it wisely, because there are very good ways to use credit to your benefit, but also could be figuring out, how do I get out of debt? Retirement planning is another big one, making sure that you're doing the right things to get to a point in your life where you would be able to retire and walk away from work. And I think when people hear the term financial planner, that's the first thing they think about is, oh, I'm not looking to retire yet. But that's not the case. As you're hearing, it's really about a big, big picture. Insurance is another thing that financial planners work on. I don't want to say, so I'm a financial planner, but I don't sell insurance, but I work with my clients to make sure that they are properly insured. Do they have life insurance that they may need? And not all of us need life insurance. So don't let an insurance agent tell you that. That's not the case. Some people don't need it. Do you have a disability insurance policy? So if you can't go to work tomorrow because you're injured or you're sick, can something cover that for you? Things like that. But that's things that we definitely talk about. Taxes is another big concept for financial planning. How are you earning? How are you paying taxes? Is there something that you can do to help alleviate some of the taxes that you do pay? And tax planning is really a big part of that. And then finally, and one thing I talk about with all my clients, is estate planning. And of course, nobody wants to talk about their future demise, but we're all going to die at some point. And we want to make sure that, I want to make sure that when I pass away, the assets that I do have, whether I have $10 or $10 million, it doesn't matter. You want to make sure that it goes to who you want it to go to. And you can set things up now so that if you do get hit by that proverbial bus tomorrow, that your assets will flow easily, and maybe your family doesn't have to do a whole lot of hard work to get it to where it needs to be. So that's a big deal too. So as far as those concepts and what they're all about, and we'll dig into some questions in a minute, Melissa. But again, you don't have to work always with a financial planner, but let's say that you're in a situation where this is the beginning, that I'm trying to figure out budgeting. I'm trying to figure out how to start saving, and how do I create how do I create goals to save for, and what am I doing, or how to get out of debt. If you're in a situation like that, there are terrific online tools that could help, like Quicken or Mint, things like that, to help you capture and take control and see exactly where your money's being spent. That's a helpful thing as far as budgeting, saving, getting out of debt. Financial coaches, which is not something that I do, but there are terrific financial coaches here in Ohio that really do a good job of working with somebody, especially if you're in a situation where you find yourself paying a little bit of your debt and then right back into it, and then paying debt and right back into it. It happens. Money is a very, very emotional thing. And there's relationships that we have with money that sometimes we can't get ourselves out of. And there are financial coaches that do terrific jobs of helping you change your habits and helping you change your relationship with money. So if you're in one of those situations, the, basic budgeting, get out of debt, a financial coach can be a really good person. Excuse me. I had this frog in my throat today. If you're somebody who's kind of beyond those things and you're looking for guidance on retirement planning, what do I do? Am I doing the right things to set myself up for my retirement, whether it be 5, 15, or 35 years from now? Okay. If you're looking for somebody to help you with understanding how am I saving and am I being efficient with taxes, let me help get my estate planning in order. That's where a financial planner can really help you out. I am a financial planner. I'm happy to talk to you and ask questions. If you want somebody who's in your neighborhood, I will give you a referral to somebody in your neighborhood that is a financial planner that charges a fee to give you advice, and they're not going to sell you anything. They're not going to earn commissions on putting you in products that you don't need to be in. To me, that's something that's very important to me, and making sure that the people that I talk to are taken care of in the right way. So that's kind of my overall view of financial planning, and kind of the little breakdowns inside of it, and the things that are what a financial planning person can do to help you and kind of get you onto the next step. So, Melissa, what kind of questions were people throwing out to you that we can help us with some conversation?
So some of the questions that were asked yesterday, and I have some, and then people here might have some as well. They were, should I pay off debt first? Should I save my emergency fund first, or should I invest first? And
Yeah.
that was one of the ones that someone asked, and that was Dot.
Yeah.
So
That's a terrific question. And I'm watching my boxes over here. Nobody's asking questions here. So we're good. Terrific question, because that's a really difficult thing to do. So investing would be the last thing you want to do in that situation. If you have debt, you want, number one, always, is to make sure you have that emergency fund. Because if you're using your money to pay off debt and you don't have that emergency fund, and then all of a sudden you lose your job or something happens, now you've got less debt, but you don't have anything to take care of yourself. So number one is building the emergency fund. So for me, for a working person who's employed, a good emergency fund is 3 to 6 months worth of what do I need to get by? Okay. So I need to buy groceries, pay my utilities, pay my mortgage, whatnot, all those bills, at least 3 to 6 months of that. Okay. Once you have that in place, then moving on to paying off some debt is a good thing. And I love helping people use I love the cat in the screen.
helping.
But I like people to use what's called the snowball method to paying off debt. So let's say I have 3 credit cards I need to pay off. One, I have a $1,000 balance. The next one, I have a $3,000 balance. And then I have a $10,000 balance for 3 different cards. No matter what the interest rate is on any of these, focus on paying the smallest one off first. So pay your absolute minimums on the 2 higher ones and figure out what you need to do to get that $1,000 one paid off, whether it be in 1 month, 3 months, 6 months, whatever you can do. Once that's gone, it's like a monkey off your back. It's a little bit of weight that one of them is gone. And now I can focus on the $2,000 one or whatever I said, and get focusing on that. Pay the bare minimums on the $10,000 debt, and focus on this next one until that's gone. It's kind of like that checklist. When you check something off or scratch it off the list, don't you feel good? Like, I got something accomplished, right? So this is the same idea. Get something accomplished, get that smallest debt off your back. When it's off your back, cut up that credit card so it's out of your mind, okay? And you can't use it, and then move on to the next one. So that's what I would recommend. So emergency fund, debt, and then move on to investing.
Okay. Thank you very much.
You're welcome. Any other one? There's
I
none
have a-
on the call. There's no questions on the box here.
Okay, so one of the another question that was also from Di was, I'm 46. What realistic percentage of my income should I be putting towards my retirement savings? I have both a traditional 401k through my employer and a Roth.
Okay. Typically, rule of thumb is 10 to 15% of your income to go towards retirement. Now, that depends on the person. Maybe this 46-year-old has a bunch of money saved already, and she may not need to save quite that much because she's really ahead of where she should be. Or if she's behind, then maybe I would suggest, if she can, to put a little bit more. It depends on any company matching contributions inside of her 401k plan. Some companies are very generous that they may match dollar per dollar up to 6%. So you put 6% in, they're putting 6% in, you're saving 12%. Right? So it may not be 12% of her own salary. So that's a kind of it depends answer. But the rule of thumb goal is to try to put 10 to 15% of your salary away, whether it be you doing it or your company doing it or a mixture of both.
Okay. Anybody have questions?
Nope. I'll let you know if anything
Okay.
pops up, but nothing's popping up internally here.
So a couple of these are they're kind of similar, so I'll ask them together because one was from Andrea, one was from Nicole, but they're both kind of the same or similar questions. One was, Andrea said, what's the best way to start investing for beginners? And then Nicole said, I just started a Fidelity Roth and I don't know anything. How should I invest in it? And then how do I learn about investing in my Roth? So they kind of, to me, were very similar. Yep. They kind of piggyback on each other. And I was just like, I'm going to just pose those both together, even though they're from two different people. So
yeah, no, they are. They're very similar. And I feel like I have to sneeze. So if I mute and sneeze, that's what's going to happen. Grab my tissue just in case. This is real life here, folks. So investing is a whole other conversation. How to invest. And for me to give somebody advice on how she should invest is really difficult to do without knowing their whole picture. Figuring out how you need to invest is, what is that money being saved for how long from now? Is this money that you're putting away because you want to buy a house in 2 years? Or is this money you're putting away because you're retiring in 25 years? So it really depends on, again, what are you using the money for? How long is it going to be invested for before you want to, and then talking about your own tolerance for risk. Can you tolerate watching something go up and down and be a little bit volatile, or do you need something that's really safe and secure? Okay. So it really just depends. Maybe what we can do is the next session is to kind of have a investments 101 where we talk about what is a stock and why would I invest in it? What is a bond and why do I invest in it? What is a mutual fund and an exchange trade fund? Just real basics on that. So to answer the question, it depends, stinks, but it really does depend. It depends on the person and what their goals are. If you're invested in a Fidelity Roth and you've put some money into a Fidelity Roth IRA, Fidelity has some really good mutual funds. A mutual fund is a bucket of a whole bunch of different stocks or a whole bunch of different bonds that you can choose from at Fidelity that you can get invested in very easily there. But again, it's deciding whether you want to invest in stocks. Do you want to invest in companies that, do you want your money to go into a fund that's buying the Microsofts and the Apples and the Teslas and the Budweisers of the world? Or would you rather invest it in small technology companies that we haven't heard of yet, but that are up and coming? So it really just depends on the investor. Fidelity does do a good job of giving some guidance. So if that person that has the account at Fidelity, feel free to pick up the phone and talk to them. They will help you. They can't give you advice, but they will help you if you say, I really want to invest in a fund that gets me into the largest companies in the United States that have been solid companies. They'll help you find that fund. Okay. All right. I had 2 questions pop up. The first, well, I got 3 now. Okay. The first one is about, I mentioned estate planning, and somebody said, what do you mean when you talk about estate planning? Is it just the wills and things like that? So yes, estate planning is getting documents in place so that you have your will, you have some powers of attorney so people can make decisions for you if you can't. But when I talk about estate planning on the financial side, the biggest thing on the financial side is making sure that your accounts are titled in such a way, or that you have beneficiaries designated on your accounts, that when you pass, it goes exactly to where you want them to go, without having to go through court, without having to hire an attorney, because it's going to be your money spent on all this stuff, but whoever you leave behind now has to juggle and figure it out. So that's what I mean when I talk about estate planning through financial planning, is really just kind of getting your ducks in a row financially, so that when you pass, your bank accounts, your car, your house, everything can just transfer automatically as soon as a death certificate is provided to the holder of that asset. Okay. Next question is, I inherited investments from my parents. I used the same financial advisor for 30 plus years until she retired. And now I have the guy who took over for her. I don't find investments interesting at all. I understand. I basically only pay attention to how my balance changes from month to month. Do I really need to pay more attention to anything else? Adlia, I believe I'm pronouncing your name incorrectly. I apologize. Do you need to pay attention to anything else? I think it's more understanding not where your money is invested, but how is it invested? Understanding like the global allocation of how much of my assets, what percentage are in stocks, what percentage are in bonds, what do those things mean to me on a really high level? I know it's not interesting to you, and I get it, because a lot of people don't like what I like. I get it. So I think it's really just getting a real basic understanding and making sure that you have an open communication with this advisor, that you're comfortable sitting down and talking to him and asking questions, and that you're comfortable sitting down and saying, I don't really like this stuff, but I need you to tell me when I need to pay attention, because that's what that person is getting paid for. They're getting paid to make sure that you get it, at least to the point that you want to get it, and that you understand how your assets are invested enough to know that they're doing what you need them to do. Okay, I hope that helps. And then one more from Nyla. The bond market is adjusting right now, so I don't want to invest in bonds. No stock as it is as safe as a bond, but what type of stocks do you recommend? I want to avoid being disbalanced with so much mid and high risk investments. Okay. So you're right. The bond market is crazy. And the stock market is crazy. Too much. I get it. Yeah, it's crazy. We're getting hit in every direction right now. There is no safe place to invest inside the stock market and the bond market right now. So if I had a crystal ball and could tell you what was going to happen over the next 3 years, and if I knew that right now we were at the bottom of the stock market, I would tell you to invest all your money in the stocks, right? So I don't have that. And there's nobody that does. So if somebody tells you, here's where you should invest because here's what's going to be the next turnaround, you turn around and run, because they don't know what they're talking about. They're speculating just like every other talking head on the news. Okay. Bonds are difficult right now. I agree. There are some, let me step back. If I were giving advice to a client on investing in bonds right now, we would choose either short duration bonds, meaning that the bonds only last in duration like 2 to 3 years. So a little short duration, not 10, 15-year bonds. So the safer ones are the shorter term right now, or maybe some higher yielding bonds, which means they're paying more interest. So those are the safer bonds in today's environment. They're not going to be perfect, and you may lose a little bit of value for a little while, but as long as you're still getting those interest payments, you'll be all right. Okay. As far as stocks, what type of stocks do I recommend? That's a crapshoot. It really is. From again, from some of the talking heads and some of the things we're reading from economists, some of the smaller companies are going to do well over the next year or two. Just because they're kind of in favor right now, meaning like some small cap stock funds or things like that. For specific companies, I don't know. I do not invest in specific company stocks. I use exchange trade funds or mutual funds, which are buckets of a whole bunch of different stocks and bonds. And I let the managers of those funds choose what to actually buy or sell, which company that I'm going to sell Nike today and buy Under Armour just because of this. They're the ones making those decisions. I don't have the manpower or the woman power to be able to research companies day after day after day after day. So as far as what type of stocks to invest in, it's really, it's kind of it depends. And to be honest, the best way to do it is to have a good diversified portfolio where you invest in some large company stock funds, in some small company stock funds, in some bond funds, maybe a little bit of international funds, and create that diversity for a long-term approach. Okay. Yeah, I think we're good. Those are the questions I have on this side. What else? What do you have, Melissa? Anything else?
So yeah, Clarissa asked me some, and it was several you've already asked, which means that some people have the same questions, which is good. And yep, 1, 2, 3. One of them was, how do I get started in the process of owning a real estate? And yeah, that was it. The rest of them, I think you've already, and what are the basics to know when starting a business, like insurance, etc. Those are the two I think that you haven't already answered.
Okay. So the one on real estate is, can you read that again?
How do you get started in the process of owning real estate? And I don't know, she didn't specify.
Yeah.
Was for investment purposes or if it was to own a
To buy
home.
a house.
Yeah, she
Yeah.
didn't specify and I didn't ask. So
Right. Yeah. So we'll talk a little bit about both. So number one, if you're looking at purchasing your first home, we'll start with that. And so number one is making sure that you have enough assets in place, enough savings that you have a down payment for that home. If you can at least have 20% down payment, then you don't have to pay what's called an insurance. What do they call that insurance? It's P&I. I can't principal. I don't remember.
PMI.
Thank you. The PMI, the private mortgage insurance. To make the reason banks charge the private mortgage insurance, they find that people that may not have a full 20% down payment, that may have a really low down payment, that they're higher risk of possibly defaulting on their mortgage. So that PMI is an insurance policy that the buyer who doesn't put at least 20% down has to pay for. So just in case I default on my mortgage, the bank is not going to, the bank will get paid by the insurance company. Okay. So it's a risk diverse way for the bank to be able to say, okay, I'll give money to Janice, even though she only has a 3% down payment. Okay. So number one is to try to, save up if possible, at least 20%. Buying right now is crazy. In Columbus, even worse than here in Cleveland. It is nuts. Some people, you got to have cash almost to get a house at this point. Right. It really is. The market's just crazy. So just beware when you're out there, making sure that you're purchasing something that is not so overvalued that you're going to end up underwater when you try to sell it in 5 years. Mm-hmm. Okay. So that's really what I have on the personal side, is just real basic stuff there. On investment side, if somebody is looking to purchase real estate so that they can rent it out and create some passive income for themselves. So very similar is making sure that you have good down payments, making sure that you have banks that are solid, that are going to give you the financing for that. But I would also recommend for somebody to do that they start either an LLC, a limited liability corporation, so that any liability from those properties that you want to rent out are out of your personal name. Okay. So somebody slips and falls on there, you're going to have insurance that covers it. But if, crazy things happen and you don't necessarily want your personal name tied to those, you can create a company that those assets are held under, then you will not be personally liable. Just your company assets will be liable if something happens. So that's the most important thing to think about there. Okay. And then the other question about starting a business. I
Yeah.
am not an expert in starting a business. So
Yeah.
I did it, but I had help. So
So-
I would say that, go ahead, Melissa.
No, that was just the basics to know about starting a business. And then she just said like insurance, etc. So,
Okay.
and I don't know what kind of business she was interested in starting. She didn't
Yeah,
specify that either. So I don't know if it's like medical or once again, a real estate business or.
sure. And you know what? No matter what business it is, that's not my wheelhouse. However, like I said, I did it. I started a business.
Yeah.
I would say there are resources out there. The Small Business Association is amazing of what they can provide to somebody who's looking to open a small business or big business. It doesn't need to be small business. Typically, when we start, we're small. So, the Small Business Association or administration, Small Business Administration is fabulous. Here in Cleveland, we have the Greater Cleveland Partnership. I'll look up to see if there's a Columbus area organization similar to that. They also offer tremendous classes and assistance and resources for people that are starting a business to get started. Yeah, insurance is a big deal when you start a business. You want to make sure you're properly insured, but depending on the business, my business, I have to have totally different kind of insurance than somebody who's opening real estate or opening a restaurant. So it really just depends. But that Small Business Administration is terrific.
Great.
Okay. It looks like the questions are done on this side. Anything else from you, Melissa?
Let me double check. I have another, I think. So I got one more question here is, it was interestingly also about real estate. Is real estate a safe investment or is it high risk? This is from Kathleen. And when is a good time to invest in it compared to other types of investment? So people are
Yeah.
really interested in real estate right now.
Well,
So.
real estate's a big deal and you can really benefit well from it. I mean, people are selling their homes now if they bought them 20 years ago. I mean, they're doing very well. They're selling high and, it was a great investment for them. When is a good time to invest in real estate rather than typical investments? I think it's always good to have a little real estate in your portfolio if you're building out a investment portfolio. That doesn't mean that you need to own a piece of property and that you need to manage it, but there can be a little bit of like a real estate mutual fund held inside of your 401k or your IRA, where that you're invested in real estate and can take advantage of that, whether it be commercial real estate or individual real estate properties, but you can do it through a mutual fund. That way you don't have to go cut the grass. You don't have to go maintain the property. And when the oven breaks, you have to pay to go replace it. That's a tough thing to do. Owning another piece of property is a lot of work, a lot of maintenance, and things happen. You need to have a lot of cash on hand for when those things happen. So there's ways to invest in real estate, again, that you don't necessarily need to own that house. You do it through just a different investment type of portfolio, like a mutual fund.
Okay, thank you.
Okay.
Yeah. Anybody else here have questions?
It's quiet over here. I think we're good.
You're quiet.
So we initially said between 30 and 40 minutes, and look at that. We are right at 35 minutes. So we're kind of perfect in the middle. So if any of you have specific questions, I'm happy to take a phone call and answer questions. I'm not going to charge you anything. I just, if you have questions about today's call, or shoot messages to Melissa and she can get them to me. But I hope this is a little bit helpful. I know it was real high level and a little bit generic, but I think it's, probably a good place to start. And we did record this session. So if you missed part of it, or if you would like to watch again, you can certainly do that. I'll make sure Melissa gets the recording.
Thank you. I am so grateful that you came in. You were our first of our group that we've had around. for a couple of months now. We wanted to get this done. And so I'm really grateful that you kind of
Great.
did our little Q&A and
Good. Okay. And like I said, I'm happy to set up another one in a, few weeks down the road, and maybe we do like an investment 101. So
that one is, I think, very helpful, especially, I mean, even if you kind of talked about resources or books as well. I don't know how many people here do, but that's kind of the first thing I dug into when I started investing was I read every book I could get my hand on. And
Mhm.
some of them are really old, like Warren, what's his name? I
Warren
don't
Buffett.
even know. Yeah, I don't even know if he's a thing anymore, but like
He's
that.
a thing.
What's her name? The Courage to Be Rich lady.
Susie Orman.
I read her. I mean, and I don't know if people are doing that anymore, right? But that's who was around. So I was
It
like
is.
reading all those books, and they were
It
all
is.
contradicting each other, and that was what was
That's
blowing
the
my mind.
problem.
And I was
So
like, ah, so yeah.
yeah, and that's the issues with some of these books are tremendous, and I
Mhm.
made a face with Susie Orman. She gives some good advice, but the problem is her advice is not to you. It's to the, just the same with Dave Ramsey and the things like that. They're giving advice to the general population. And
Right.
when Susie Orman says you need $2.5 million before you retire, and I sit here and go, are you out of your mind?
Yeah.
No, most people don't need anywhere near that. Some people do, absolutely, but a lot of us don't. So, she's talking to the general public and it's not to you. And some people, they take it to heart and then they're afraid to retire because they don't think they have enough. And that's not the case. So you just got to, that's why sometimes when you get to the point where you need a professional, then they can talk to you about your goals and what your needs are. And I have had clients retire with a savings of $250,000 and they get a small pension and get their social security and they're living a beautiful life. So,
Right.
it's don't listen to those numbers all the time.
Yeah. So thank
All
you
right.
all for coming, and thank you very much.
Terrific.
So helpful. Okay.
All right. Very good. Good to see you.
Thank you.
Bye, everybody.
Bye-bye.